Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Moving into the second consecutive day, the Australian dollar remains slightly to a bearish case, with the two red candles supporting the downside move. Now expects to see a slightly weaker play into today and therefore could see a move back towards the region of 73.20-30 area before any short-term demand returning. It is anticipated though from there could see a rebound back towards our topside key level and also the yearly high around 74.2540 or 20.2540 and therefore could see another rejection. However, a break above there would give me a neutral bias in the short term and see what the market reveals from the break. Looking at the euro, the market has turned to a bearish case to support the market for a further slide. And the reason behind that is the RSI has broken through the midway point, and also the fact is from the rejection from the topside level of 110.90 to 111.15, all eyes turn towards 109.90, and a break there will see further slide towards 109.30 and reassess in light of the pattern. And along with that, with the US dollar, which measures the greenback strength against a basket of 6 major currencies, edging slightly higher overnight after a slightly surprise from the US Federal Reserve Chairman Jerome Powell after his speech was slightly more hawkish and indicated that to combat inflation could see a 50 basis point rate hike. The dollar strengthened on the back of that, and also the market for the euro has tumbled slightly and expected to continue into today's session and on the open of the European session. Dollar yen edging higher still and not backing away. As you can see, the market is still pressing the 5-year highs. Although I hold a neutral view, I feel the market could soon see a bull trap and therefore could see a rejection from that 120 level, although we have seen a brief touch there. Let's see how the market unveils itself into the European session, and maybe we could see a break back towards this level, somewhere around the low 118. Market still relatively respecting the bullish case, although we have seen a slightly buckled RSI, which could see a rebound off that midway point, and if so, still holds the view up towards 132.20, or maybe stretching higher to 133. In light of the recent rebound in front of that bottom side of the range, should continue this pattern towards the top side. Talking of rebounds, sterling Kiwi has managed to find the support again from that 190 level, and from there, the market is attempting to regain its upside attempt, and that is towards 192 to 194 as a potential target. As you can see, we're still trading slightly sideways with price and also with the markets viewing the RSI underneath the midway point. In light of the pattern, any upside attempts should find resistance around 1,948 to 54 and eventually see a rejection from there, which could see the market look towards the bottom side of the range, which comes in around 1,900. In light of the pattern, I feel the bears are still lurking from that top side, so let's see if we do see a down test. Finishing up with the break of 106, escalated up towards 110, and now fueling on to possibly 116 as a potential target. I did note though, a break of 106 would leave me neutral, but however, for those who wish to trade this market, that the upside potential could come through, but it's going to be very volatile, very whippy, and very hard to assess due to that one candle inside this range was very volatile. So this is the reason why I would step aside and sit with a neutral bias until we get a little bit more indication in how the market's looking. Although the RSI is holding to a bullish case, the MACD is still questionable. Nevertheless, there is still some bias to the upside, given for the fact that the market's been rallying now for 3.5 days. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the rest of the day.